How the rich avoid taxes legally. Have you ever wondered how the rich keep millions without breaking the law? Today, I'm going to break down the exact legal strategies wealthy people use to reduce their taxes. And the crazy part is, most of these are available to regular people too. Here's the truth. Taxes are one of your biggest expenses, but the tax code isn't just about collecting money. It's full of incentives and loopholes designed to reward certain behaviors. The rich, they've mastered using those rules in their favor. And no, I'm not talking about shady offshore accounts. I'm talking about strategies your accountant should be telling you about. First up, business ownership. When you're an employee, you get taxed before you spend your money. When you own a business, you earn money, deduct expenses, then pay taxes. This means your phone bill, travel for work, even part of your home, can become business deductions. The rich structure their income so more of it flows through a business entity instead of a paycheck. Second, real estate. Real estate investors use depreciation, a tax deduction for the wear and tear on a property, to reduce taxable income, even if the property is going up in value. They can also use a 1031 exchange to sell one property and buy another without paying taxes on the gains right away. That's how someone can keep upgrading properties without a giant tax bill every time they sell. Third, capital gains versus income tax. The rich often prefer to get paid through investments rather than salaries, because long-term capital gains are usually taxed at lower rates than ordinary income. This is why CEOs might take a worse salary but receive millions in stock options. They're turning taxable salary into lower-taxed investment income. Fourth, borrow, don't sell. Let's say you own $5 million in stocks. If you sell them, you pay capital gains tax. But if you borrow against them, you get the cash without triggering taxes, and you can often deduct the interest too. This is how billionaires can fund lavish lifestyles while reporting very little taxable income. Fifth, retirement accounts and tax shelters. Wealthy people max out every available tax-advantaged account, 401ks, IRAs, HSAs, but they also use advanced vehicles like defined benefit plans for massive deductions. Some even use charitable foundations to both give back and receive tax benefits at the same time. So here's the takeaway. The rich aren't just making more money. They're keeping more because they understand the rules. And the good news, many of these strategies aren't exclusive to millionaires. Learn them, apply them, and you can shrink your tax bill too. If you found this helpful, hit subscribe. I've got a video coming up on how to pay $0 in taxes legally that you don't want to miss.